But the bottom line is you had all the makings of a bubble, and we know that Bitcoin is a classic risk on environment asset. So if that was ready to roll over, for my first job, I was in college. I knew I wanted to be a trader ever since high school when I made fake money in a fake account in the late 90s with the dot-com bubble. So it was very addicting to make fake money when I didn't have a lot at that time. So I went to college for economics, thinking that was my best play to get into trading and investing. And then I went to work for MetLife, doing kind of financial planning initially. Well, you learn very quickly that all the decisions on investments come from way higher than you. So your job is to just get people on the phone, right? And so after 1 year, I said that was it for me, and I had $10,000 to my name saved at that point. And I went to a prop firm and I said, hey, I want to learn to trade and let me get started. And needless to say, it was a rough journey. I lost that 10,000 many times over and had to replenish it through working multiple side jobs. Say for me to turn the corner, and needless to say, it's a slow journey, meaning like you're losing a lot, then you lose a little less, then a little less, then you're a neutral trader, and then finally you turn that corner. It probably took me a good 3+ years to get to that. I wish I had educators like yourself or myself back then. I didn't, so it was a lot of trial and error, but it took me years. People have to remember the market will make you pay, or you have to follow someone who knows what they're doing. Following someone is a lot cheaper in the long run. That's right. It takes time. You have to work at it. It's not something that you just do a trade and you're like, oh, instantly I understand. Keeping a trade journal, looking over why you lost on a trade, going over that multiple times. You always learn more from your losers. I'm in the camp that, so we know we have some big stuff coming out, the CPI data, the Federal Reserve, likely 50 basis point rate hike. So when we're talking short term, I have a neutral to positive bias on the market. That comes from this pattern here, which is basically just sideways consolidation off of this up move. So there's a difference between a micro pattern and a macro pattern. Micro reflects very near-term price action versus macro would be the bigger time frame. The micro pattern, the near term, is probably slightly positive here. You would assume that it might coincide with maybe a slight pullback in inflation or something else like that. But once we get that move up, I don't think there's a ton of upside in this market. And again, I'm kind of looking at a chart trend line, maybe something like this. Maybe this is your max upside here. And then we start to roll over. And eventually we take out these recent lows at 380 on the SPY. And I'm still in the camp, and I've said this since the beginning of the year, that I would not be surprised if by the end of this year or early 2023, we retest that pre-COVID high down there. Yeah, so I still remember in October, I did some live interviews in Dubai, and I was talking about that, and I was at a live Bitcoin conference. So you can imagine everyone wanted to tar and feather me at that point.
Did they throw
more like the blank stare of like, am I really hearing this guy say this, or is this real life? But the bottom line is you had all the makings of a bubble, and we know that Bitcoin is a classic risk on environment asset. So if that was ready to roll over and you had the S&P 500, if we go back to the spiders here, it kept on hammering on this trend line. And what we know from trend lines is the more we hammer on a level, the weaker it becomes. Right. So we knew that. We knew the Fed was essentially going to start to pull back on quantitative easing and start to taper. So it was kind of like everything coming together. And in the S&P chart, what I love showing here is if you looked at the beginning of this move, it was very vertical, hit and then sharp move and then a higher and higher. And then what you got over here was kind of a more flat top. And let me get my trend tool out there. And this tells you that there was a lot more distribution going on. So it was basically smart money was starting to take it off the table. So it was just that combined with Bitcoin, combined with how many times in a row we were hitting this line that gave us the probabilities that a break was likely coming. So I think the gold and silver trade, and more so gold even, and if we bring up the gold chart here, this is just what you expect from gold, right? So let me erase this trend line here, get this out of the way so we clean it up a little bit. But basically you had this longer term breakout here on gold. And then you went to right at double top. So double top is a classic resistance. We pulled back. We did the classic retrace to the scene of the crime play right here, which is you're retracing to home base. And now you've moved up and you're starting to make bullish consolidation. So I'm in the camp that, number one, gold is still positive for the year in spite of the DXY, the dollar, just being absolutely ripping higher, right? I mean, this was where the dollar was at the start of the year. So, I mean, usually the gold will go opposite the dollar, but instead
it rallied with the dollar.
That's
strength.
right.
Yeah.
So
till the last month.
Right, exactly. So the fact that you have a strong dollar and you still held up on gold tells you that money flow continues to accumulate. The chart itself on gold continues to tell us that as long as the breakout holds here, this downsloping trend line, and you're making this factor, I gotta believe you're still in this inflationary environment where gold has quite a bit of upside to go. So again, it's kind of the perfect asset. If you compare it to the S&P, if you compare it to Bitcoin, it has been, I mean, you haven't made a fortune on gold, but you haven't lost 20% like the S&P or 50% like Bitcoin. I think it is as well. I mean, it's just hard to imagine. I mean, right now you have a lot of kind of unease globally, geopolitical stuff going on. We know Russia and Ukraine, that whole situation is still unfolding. So it makes global money want to find the safety of the dollar, and that keeps this bid in the dollar going. But as time progresses, I do believe that we'll start to see that fade. We've already seen the digital yuan starting to take over. There are transactions going on now in that form by more and more countries, and I do think that over time the dollar will become less and less of a stable reserve currency, and ultimately that's a huge bullish scenario for the dollar, for the gold chart. I do think that was another nail, and maybe multiple nails in the coffin. I do think that the track we've been on, like the Chinese introduced the digital yuan long before that, and there's no denying that China wants their currency to be the reserve currency. So you've had this aware of, but I would love to see an ETF on it at some point. I know it's controlled by the government a little bit, which also makes it a little problematic, but certainly that would be a cool thing to see in the future. But the bottom line is the dollar has been on this path for a long time. There's, Iran has wanted to do trades outside of the dollar for long periods of time. I mean, so it's been something that's kind of been occurring for a long period.
Hegemony ending.
Yes, but I do think it's been sped up by the recent events. There's no doubt about it. Other countries are like, okay, listen, we have to be a little bit more aware of this now. I have picked up some. I am a realist in that, there is a chance that we could go and retest this area down here on the silver chart. But for me, I think when I'm looking to invest, so there's the difference of swing trading versus a longer term trajectory of a year, let's say, out or more. And I think that even if we dip down to 19 from here, you just used it as an accumulation zone. Because again, if you're in the camp that the dollar eventually will decline in value, gold and silver will be a key place where you'll get major runs. And I think you would agree with this, is that if you look at this low from March of 2020 to this high, even, this is all inside bar. It's not pretty. It's not nice looking, but it is digestion. It is digestion of the big up move here. And so I do think this ultimately leads to another leg higher. And what you could do is you could actually do a measured move where you take this low here and this high. And then when you do get that break, that would give you a target to the upside of that distance.